traders, and welcome back to Smart Money Insight. So this is going to be the channel where we try to deep dive into every market opportunities and help traders like yourself to make a better and informed investment decisions. My name is Rain, and today we would like to talk about Nvidia, a stock that has recently seen a big corrections and raised a very important question for many investors. Is right now a good time to buy Nvidia stocks? And I will tell you that, well, today, right here, right now, you will find the answer throughout this channel. Well, on one hand, Nvidia stock pulled back from its high, which caused a lot of big concern for some investors. On the other hand, as you know, some savvy traders will think that every corrections often present opportunities. Let's examine both sides of story here. Yes, right now, Nvidia faces a lot of challenges, faces a lot of headwinds, and I will tell you that the broader tech sectors right now has been very volatile, especially concerning around persistent inflations and global economic uncertainty, which could weigh on these high growth stocks like Nvidia. And on the top of that, Nvidia valuation remain high compared to its traditional matrix, leading to some investors or analysts believing and speculating about the further downside risk of the Nvidia. But at the same time, Nvidia fundamentals today remain undeniably very strong, and indeed the company is a leader in AI and data center technologies, the two sectors with tremendous growth potentials. It's also crucial to look beyond the noise. Well, the recent correction has brought Nvidia closer to a key support level, while its long-term trend remain in the upward directions. So stocks that find support at such a level often rebound and presenting a strong entry point for traders and long-term investors. So the paradox here is strong earning but the sharp drop. So what was really puzzling here is that Nvidia stock dropped 8.5% on the same day it reported strong result and positive outlook on the last Thursday. Here's the detail. Nvidia latest quarterly report beat Wall Street expectations, with its revenue surged 78% to $39.3 billion, which exceed the $38.1 billion estimate. Company data center segment also saw revenue nearly double to $35.6 billion, with projected revenue for the next quarter reaching a midpoint of $43 billion above the consensus estimate of $42.1 billion. And I will tell you that these growth numbers are impressive, which also explain why the stock rebounded back at 3.8% positive on the following day, which was on last Friday. This suggests that these long-term investors saw the current dip as a buying opportunity. So many believe that the sharp drop on the Thursday was largely driven by the Trump announcement that Mexico and Canada would face 25% tariff starting on the March 4th, along with an additional 10% tariff on imports from China. So what's the opportunity here for the traders? The correction here can also be interpreted as the healthy reset. If you understand about the market manipulation technique, you probably will recognize that the recent volatility likely shook out those weak hands and speculators, and that will set up the new stage, a more sustainable rally for the stock. And this environment will allow the Nvidia to regain its momentum. Secondly, in the uptrending channel, when you could identify two corrections forming higher low supports, then from historical price pattern, I would say there's a potential it is signaling for a price rally. So while the market always carry risk, Nvidia's strong fundamentals, technical setup, and long-term growth outlook make it an opportunity worth considering. Now let's dive deeper into the sentiment analysis from the option markets and see what makes this tech giant a potential buy in today's markets. But before that, if you're new to this channel, you can like, you can subscribe, and click the notifications so you will not miss out any good trading opportunities.
Now, we will dive into what the option market is telling us about the Nvidia stock. As per closing of the February 28th market, here's the option profile of NVDA. The top chart is the implied volatility smile of NVDA with the x-axis representing the option strike price, and the y-axis representing the implied volatility of the option at each individual strike price. The blue dots represent the put option, and the red dots represent the call option. Close to the current stock price ATM, the average implied volatility of the call options is very slightly lower than that of the put options. That indicates the trader's fear for a price fall is about the same with the expectation of a price rise. Close to the current stock price ATM, the average volume of the call option is much greater than that of the put options. Clearly, it shows that the traders are betting their money more on a rise in the stock price than the fall in the stock price. Particularly, the traders appear to bet that the stock price will rise to 130 and beyond. In the universe of the option open interest, the call option open interest see a discernible rise in the call option open interest from February 27th, close to February 28th close. Such case usually indicates a strong conviction that the stock price will likely rise, then fall. And that's not happening with the put options. We can also observe that there is a major put-induced support level at 105 and moderately strong call-induced resistance levels at 135, 140, and 145. Let's look at the price chart. The bullish index of NVDA from the option market perspective is currently 0.625. 0 is for total bearishness, and 1 is for total bullishness. Please note that this sentiment reading is taken from what's reflected per February 28th closing market. And like what wise men used to say, all boats rise and fall with the tide. So that is all the analysis for today. See you in the next one, and trade smart.